Okay, and this will be posted under Chapter 4. Okay, so January 3rd, Pleat Company acquired 80% of Stitch Corporation's common stock for $344,000 cash. At the acquisition date, the book value and fair value of Stitch's assets and liabilities were equal, and fair value of the non-controlling interest was equal to 20% of the total book value of Stitch, you think? Okay, if one is 80%, then the non-controlling interest is going to be 20%. The stockholders' equity account of the two companies is as follows, and they go ahead and give it to us for the subsidiary, and they give us the information for the parent, Pleat, here. Okay, now non-controlling interest was assigned income of $11,000 in Pleat's consolidated income statement for 20X9. Based on the preceding information, what will be assigned to the non-controlling interest on January 3rd, 20X9? Now that's on the date of acquisition, isn't it? Okay, and the total, what? Total book value is the stockholders' equity, isn't it? $430,000. So at that time, I would go ahead and assign what? 20% of that, right? So 430,000 times what? 0.2 gives me 86,000. Choice A. Okay. Based on the preceding information, what is the total stockholders' equity in the consolidated balance sheet? Whose stockholders' equity do we pick up? We pick up the parent's stockholders' equity, don't we? Everything else gets eliminated. So 1,150,000. The hell? Huh?
Plus the non-control interest.
Oh, thank you. Thank you. So it's the what? Total stockholders' equity is going to include what? The non-controlling interest share of that, right? We have a separate line item down there for them. Okay. So thank you. Yeah. So it's 1,150,000 plus what we just calculated on the previous question, which is what? This 86,000. That gives us the 1,236,000. Because the non-controlling interest is part of the overall stockholders' equity, right? Okay, good. Number 3, based on the preceding information, what is the amount of net income reported by Stitch Corporation? Now, look, if we're trying to get Stitch Corporation's total net income, and they told us that what? 11,000 is assigned to the non-controlling interest. That means that 20% times X, we'll just call it times so that it's not two X's, times what? Times, we'll call it sub income, equals 11,000, right? So if I divide 11,000, doing the algebra on that, by 0.2, then I should get this 55,000, of which 20% belongs to the subsidiary. Right? Okay. Okay, good. Number 4. Okay, new set of facts, blah, blah. And based on the preceding information, what should be reported as non-controlling interest in net assets in Power at December 31st, 20X6 consolidated balance sheet? Okay, so I need to get the non-controlling interest, right? Now, at 12/31, 20X6, which they're giving me the information as of that date, right? Okay, so I simply have to pick up the stockholders' equity, which is the common stock and the retained earnings, which is 80,000 plus 96,000. That gives me what, 176? 176? 176,000 of which, how much did it say belongs to the 20%? So that's the amount that's going to be, what, 35,200? That's that line item that we were looking at that's part of the stockholders' equity section, right? Okay. Based on the preceding information, what will Power Company report as common stock outstanding on its balance sheet? And I'm kind of almost reluctant to give you a question like that on your exam. It's just whatever, 150, right? I mean, there's no impact on the common stock of the parent. Unless they issued stock for the purchase or something. I guess that might be worth considering, but here they acquired it for cash, I guess. Anyway, they told me the 1231. It doesn't matter what they acquired for. They're telling me the common stock at 1231. I guess what they're trying to trick me into doing there is combining the two common stocks. Common stock is eliminated, right?
Yes.
Of the subsidiary. Okay. Putter Corporation owns 80% of the voting common shares of SAN. Non-controlling interest was assigned $24,000 of income in 20X9 consolidated income statement. What amount of net income did SAN report? Okay, I guess we're getting repetitive here now with this. It's going to be what? 0.80 times sub income will equal 24,000. I mean, not 8, but 0.8, but what? 0.2. Okay, so 24,000. Divide each side by 0.2. Should give me the 120. Okay, so those first few ones, pretty simple. Okay, now we start getting into some of these others, and you got to start to really kind of get your mind into thinking how we looked at the spreadsheet and stuff as the numbers go across. Okay, so they tell me PETA Corporation and its subsidiary reported consolidated net income of $320,000. Now that $320,000 is the big consolidated number. It includes what? It includes everything. It includes the sub's entire net income. It includes the parent's entire net income, doesn't it? Yes. The consolidated number. Even though we eliminate the sub's net income from the income statement, it's Jason and it comes back on the subsidiary's income statement, doesn't it? The consolidated net income. It's just how we want to show it. We don't want to show it as investment income. We want to show it as part of the sales minus the expenses, et cetera, right? Okay, but it still, that includes all of the parents, all of the subsidiaries' net income, right? Okay, now they tell me that we own 80% of the stock, and non-controlling interest was assigned $30,000. So that means that what? Sub income is going to be 0.3. Is it 0.3 or 0.2? 0.2. And that's going to end up equaling 30,000, isn't it? Right? So to get the sub income, just doing the algebra, guys. I'm not trying to insult anybody's intelligence here by doing algebra, but that gives me 150 is the sub's income, isn't it? And since that consolidated net income number includes what? The entirety of the sub and the entirety of the parent. If I simply want to get the parents, I subtract the subs income from the consolidated net income, and I'd be left with the parent, wouldn't I? Right here. Question? That one gets a little bit trickier, right? Because you have to think about that consolidated income, and where it gets confusing is you're like, but wait a minute, we get rid of the subsidiaries net income, yeah, so that it doesn't show up on the parent, on the income statement as what? On the consolidated income statement as investment income, the way it's showing on the parent's income statement. But the sub's entire net income is sitting in that consolidated income account, right? Consolidated income line item. We got the subs income in there. They're all of their sales, all of their expenses, right? Okay, good. I love that question so much. Here's another one that's basically different numbers. Okay, so we have what? We have the consolidated net income is 380. Okay. We assigned 25,000 to non-controlling interest, and now it's 0.75. So 0.25 times sub income equals what? Equals 25,000. Good. I divide each side by 25,000. So sub income is equal to 25,000 divided by 0.25. That gives me sub income then of how much?
100,000.
Huh?
100,000.
100,000. Good. And so I go ahead and I do what? I subtract all of that from the consolidated to get the parents, right? So that's 280. Okay. Question on those two? Okay. I can promise you you'll see something like that on your test. The book says it was hard. So I can go around saying, oh, I asked the hard questions on the test and my students got 90%. Okay. All right. Based on preceding information, what would be the total assets in the consolidated balance sheet at 12/31 X1? I mean X9. Sorry, you're going to have to bust out your calculators. Current assets are what? 200 plus 140, 340,000. I'm not putting that under the credit column, guys. I'm just adding it up. That's not a credit. I'm just adding it up. How about depreciable assets? 600? Okay, good. Do I have to do anything with this? I add those two together, I get what? 940? Then what do you want me to do to get total assets?
Minus the investment?
Huh?
The investment?
Well, I didn't add the investment, John. I didn't pick up the investment. But you're right. If they gave me a total asset number, then I probably would have started with that and then subtract the investment and subtract and then I'd be good. Okay, but they didn't give that to me. So the faster way to answer it is to now just do what? Subtract the accumulated depreciation. So what's that? 198,000? I subtract that and I should get hopefully the answer, which is what? 742? Does that work? Okay. Question? What we did there? Okay, then you come down and we say based on the preceding information, what are the total liabilities? Okay, I can handle that. I can almost do this one in my head because what? That's 200,000 right there, isn't it? And this one, these two together is what, 130? 330? Huh? Yeah, 330. Based on the preceding information, what would be reported as retained earnings in the consolidated balance sheet? Now, first off, guys, whose retained earnings shows up in the consolidated balance sheet? The parents at the end of the day, doesn't it? Even though it's kind of weird because we back it out of the investment income and including the total, if I look at this question, I can just focus on the what? Parents' activity and be able to answer the question, right? Okay, so that's what I'm going to do. That's the easy way to answer it. And I'm going to put that on the board just so we can see the numbers as we go along here. At the end of the day, we're going to report the parents' retained earnings, right? So let's see if we can figure out what the parents' retained earnings is supposed to be. Okay, so do the parents have any revenues? Where's my revenues? I know there's revenue there because comes down to the next page. Okay. Okay, good. So the sales for the parent is what, 250? Sales are 250? Okay. So put sales. Okay, good. Now, should I include the investment income? Investment from subsidiary? Should I pick up the investment from subsidiary? Okay. Keep focus what I'm looking for here. I'm looking for the parents' ending retained earnings, right? Isn't that what I'm looking for? Yeah. Would the parents include as part of their net income the calculation of their share of the subsidiary's net income? Okay. Right now, I just want to know what the parents' retained earnings is because that's the consolidated retained earnings, isn't it? Is that what I end up reporting, which is what this question is asking me? So I'm going to take the strategy here of just focusing on the parents' activity then, right? Okay, so when the parent prepares their income, would the income for their share of the subsidiary be included in their calculation of their net income?
Yes.
Yes, it would. So I'm going to go ahead and I'm going to pick that up. Sub-income, their share of it, which is what? 36,000? So I'm just going to add those two numbers together just to keep us 286. Right? Okay, then I'm going to pick up the parents' expenses, right? And the parents have now, going back up, I can see the expenses in this upside down income statement. Okay, I have what? Depreciation expense of 25. And I think they gave me other expenses of what? 95?
Excuse me, Professor.
Yeah.
Depreciation expense should be 27.
27. Oh, thanks. Thank you, Coleman. My hero. So we subtract the 27,000. Any other expenses?
Investment.
Any other expenses?
Investment be included in there or no?
Huh?
Would the investment be included in there or would that not be included?
No, that's on the balance sheet. We're prepared. This is an income statement,
My
brother.
bad. That's-
That's the income statement of the parent, right? John? Okay, so the parent's net income then is how much?
164.
The parent's net income is 164, right? 164,000? Okay, good. Now, I'm going to go ahead and I'm going to keep going down here and I'm going to just do a statement of retained earnings for the parent. And again, they're giving me information. Huh?
Beginning of the return earnings.
I'm going to go ahead and I'm going to pick up the retained earnings, and the beginning retained earnings was what? 150,000, because they're showing me the trial balance for the two companies as follows. And so I've got what? Retained earnings of 150 is the beginning?
Yes.
Okay. So since this is a trial balance, it's before I've done all my closing entries, right? Okay. So I'm going to get my beginning retained earnings, which is 150,000. What do I add to it? Good. I add my net income. Net income is, we just calculated 164,000, right? And then I just need to pick up the dividends declared for the parent was what? 20,000. And so I subtract dividend. Dividend is, what did they say, 60,000? 20,000. Dividend is 20,000. And when I do the math on my statement of retained earnings, I end up with an ending balance of 294,000. Is that the answer? So the consolidated is the parents, isn't it? Consolidated retained earnings?
Yes.
Is the parents' retained earning?
Yeah.
Okay. And it works that way because what? We're going to include all the activity of what? Of the subsidiary in there, aren't we? In that consolidated number? Now, if you're always wondering why do I say beginning, add, subtract, and I write the words beginning, add, subtract, ending balance, in case you ever get stuck, that's always how we analyze these things, don't we? So I could, I don't know, give you a question which I might say, well, the ending balance is 294. What's the beginning balance? Or what would be the debit to retain earnings in the consolidating entry? Answer is going to be what? The beginning balance, and you can work your way back up this thing. I don't think I'll do that. But if I'm teaching this class during football season and the Raiders are losing and I'm preparing your test on a Sunday, then I might do something mean like that. Okay? Question? Okay, good. Let's go ahead and let's take a look at, based on the information, what is the non-controlling interest to be reported in the balance sheet. So non-controlling interest is going to be the subsidiary share of what? The common stock, which is the non-controlling interest share of the common stock, which is what? 50,000 times 0.2. Okay. 50,000, is it 0.2 or 0.1? 50,000 times what? 0.1. I have to get their share of the common stock. I know that, right? Guys? So that's 50,000 times 0.2 is going to give me what? 10,000? And then to get the retained earnings share for the non-controlling interest, I do a little statement of retained earnings for them, don't I? When I say a little, I mean a 10% statement of retained earnings. Okay. And the way I would do this, you could do it by taking everything 10% at a time. So let's just do it that way, just so it's, why did I say 0.2?
It should be 0.1, right?
Yeah, and it's 5,000, right? Right, it's 10%. Okay, so let's just do it that way. We'll say 100,000 was the beginning balance in the retained earnings, right? For the subsidiary. But since I have a non-controlling interest, that's what? 0.10. So that's 10,000. And then I add what? Net income. Now, the net income of the subsidiary now is going to be, just looking at the subsidiary, is going to be, and I'm going to do it the slow way here just to make sure I'm following what's going on, is the revenue of what? 110 less expenses, and they gave me what? They gave me depreciation expense of 10,000 for the depreciation. Other expenses you say are 60?
Yeah.
Other expenses are 60. So I subtract the 110, I subtract the 10, I subtract the 60, I get what? 40. Net income of 40,000? Okay, of which what? 10% belongs to the subsidiary. So just writing that down, 40,000, I'll just put it here since we already started this down here. Net income of 40,000 times what? Times 0.1 gives me 4,000. And then I subtract what? Subtract the dividend. They tell me the dividend was how much?
10,000.
Dividend was 10,000. So dividend of 10,000 times 0.1 is 1,000, right? That I'm going to subtract. So my share of the common, my non-controlling interest share of the common stock, the non-controlling share interest of the beginning retained earnings, non-controlling interest share of the net income, minus the non-controlling interest of the dividend gives me a total there of what? 18,000? Is that the answer? Okay, so it's the non-controlling interest share of what? Whatever's in the stockholders' equity at that point in time, right? Question? Okay, good. Based on the preceding information, what would be reported as total stockholders' equity in the consolidated balance sheet? Now, first off, I know that I'm going to have to pick up what? The parent's stockholders' equity. So the parent stockholders' equity is what? The common stock of 100,000. The parent's retained earnings of what? And I pick up that number that we used from the previous problem, 294 was their retained earnings. We calculated that there. That's part of the consolidated stockholders' equity, right? The parent stuff. And then I have to pick up what? The non-controlling interest share of the stockholders' equity, which I had just calculated in the previous problem as being what? 18,000. And when I add those three numbers up, I get what? 394 plus 18 is 412,000. Is that the answer? Question? Consolidated stockholders' equity is always what? Always the parent's common stock, always the parent's retained earnings. We know we got to get that. And then the non-controlling interest, which is what? The non-controlling interest share of the common stock. If there was additional paid in capital, I'd have to throw that in. And then I just basically do a little statement of retained earnings. And I say little because whatever the share of the subsidiaries, of non-controlling interest share of the subsidiaries. And I did each number multiplied by 10% just so we could kind of see how it works. But what I would do is I would do the total and then what? The total retained earnings for the entire subsidiary and then multiply that by 10%. I'd get the same answer, wouldn't I? So I don't have to sit there and keep multiplying by 10%, increase the chances of an error on my calculator. So I wouldn't do it like this. I'd get the total ending balance and multiply that by the 10%. Not this, but what I wrote up there. Rather than do them all by 10%, I just get the total, multiply ending balance, and multiply that by 10%. You get the same answer, wouldn't you? Based on the preceding information, what amount were reported as income to controlling interest in the consolidated financial statements? Have I already answered this question? Have I already figured this out? It's 164, isn't it? The income attributable to the controlling interest is the parents, isn't it? Because we only included their share in the investment income. How much sales should be reported? Oh, different. Okay, so that's it for that set of facts. Sales are $1 million for Pluto, and Star is 500,000. So, and that includes what? $80,000 of sales from Star to Pluto. Okay, so what happens? I take the million, I take the 500,000, but then I have to do what? No. I have to subtract what? 80,000. You can't sell stuff to yourself, right? So that entire 80,000 gets eliminated. Don't forget, guys, I'm going to adjust for the difference, the 20%, as that subtract from the total net income number, right? But I have to sit there and I have to eliminate intercompany because I can't generate a sale to myself, right? Unless I'm Enron. I can't generate a sale to myself, and so I have to back out that 80,000 intercompany sale. So when I'm reporting my net income, I'm going to report my sales. It's just sales to those outside, right? Then I will also, once I get the net income number, that will be a subtract from the net income number, the non-controlling interest part, right? Okay, but this number is going to be what? 1,420,000. We'll deal more with intercompany, okay? But the 20% calculation is going to be after I subtract the expenses, I get the what? Consolidated net income number, and then the proportion that's attributable to non-controlling interest would be 20% of net income, wouldn't it? That's when I use the 20%. And the amount that's left over that is attributable to the controlling interest would be the 80%, right? On the net income number. Or whatever it was that the parent reported as net income, because we would have backed out the 20% when we reported the income from the investment using the equity method on the parent's books, right? Breathe or something.
Yes.
Yeah?
Yes.
Okay. Let's look at this next one. Let's see. On December 31st, 2009, Play Company acquired 80% of the common stock of Station Company. At that time, Play held land with a book value of $100,000 and a fair value of $260,000. Station held land with a book value of $600,000 and a fair value of $600,000. What amount should we report as land? Now look, when we're picking up the amounts for the subsidiaries, yes, we should pick up the fair value, but it so happens, since we're in a chapter in which book values and fair values are equal, then obviously I have to pick up for the subs land $600,000. They only give me one number, right? So the question becomes, what do you pick up for the parent? Book value or fair value? Book value. You guys knew that from your test last time. I mean, I haven't tested you on anything different here than we did last time, because the book value and the fair value was exactly the same for the subsidiary, right?
I just question, but if the subsidiary has a fair value that's different from book value, we still have to pick up the book value, right?
No.
We have to
No.
pick up the fair one.
We'd pick up the fair value because the parent is sitting there and the parent is the one that's buying, right? So nothing changes on the parent's book. We still carry fixed assets like land and buildings at historical cost, right? But the parent is acquiring what? They're supposedly in an arm's length transaction is the way we're treating that, acquiring something new. So if there had been a difference and they gave us the the fair value of the, if it was lower, we'd subtract it, right? We'd use the lower amount, whatever the fair value is, and we would subtract it. We use whatever's the fair value, higher or lower, I don't care. That's what we would use, right?
So that means, okay, got it. Thank you.
Yeah, we pick up the subsidiary's fair value, we use book values for the parent, right? Just so happened because we're in a somewhat unrealistic chapter in which we're acquiring things, and and I think you can probably start to figure out where the theme of this is going to go, which is chapter 5. We're going to be acquiring for what? More than book value. So just like on your first midterm, almost everything's going to gear towards what? Chapter 5, because that's more likely. So all we're really doing here is helping ourselves to sort of get some foundation when we consider it at exactly book value, because it's rare that you acquire the assets at exactly the book value. You usually acquire them for more than book value, right? And so we'll be having a goodwill calculation coming in, etc. Okay. Number 18. What are the net assets immediately after the consolidation? Huh? Oh, it has its own set of facts. Okay, acquires 8% ownership in Slack Corporation for $200,000. Fair value of the non-controlling interest is determined to be $50,000. Fair value, book value, whatever. Now, how do I know that fair value and book value are the same here? Well, they tell me that what? Net assets are $250,000. And if I take $250,000 and I multiply that by what? 0.8, that means that I paid book value for those assets, didn't I? $200,000. Okay. And so when I look at my net assets immediately after, I have what? I have net assets of Pallet Company is the parent's book value of 6, fair value of 650. What should I pick up for the parent's net assets? Book value or fair value? Book value, good. So that's 600,000. Good. Then I have to pick up what? Okay, well, fair value and book value are exactly the same. Okay, so, right, because if I pay $250,000, guys, if I paid $200,000 for 80% of a book value of $250,000, then I paid book value for that, didn't I? So the controlling interest part is what? $200,000, and the non-controlling interest, fair value and book value are exactly the same, aren't they? Here, so the book value there is what? Fair value, book value, whatever is 50,000. Is that my total net assets? 850,000. Net assets is the stockholders' equity, right? Stockholders' equity is going to be the book value of the parent. Book value, well, fair value of the subsidiary, but in this case, the fair value of the subsidiary and the book value of the subsidiary are exactly the same, aren't they? I know that because I had to do what? Pay $200,000 to get 80% of something that they told me had a fair value of $250,000, but since I paid $200,000 for that, then that must also be the book value of that, right? And then I just pick up the fair value of the non-controlling interest. Question? Okay, good. Number 19 is going to be kind of like the full-blown problem. When I tried to create a full-blown problem on your midterm, I realized that iLearn does not have the power to do journal entries and correct them, so I had to do something else. So probably journal entry questions will continue to come in the format of multiple choice, and I'll have to do the full-blown problem sort of the way I did the question, because I had too high hopes for iLearn. I can't create a journal entry question in there that I know of. Okay? Okay, good. I don't know how to do it. I shouldn't say I can't. Well, if I don't know how to do it, then I can't do it. Okay? So, but you still will see journal entries. Now, they come in and they say, what journal entry will parent make on the date of acquisition to record the investment in Sun Inc.? And so they tell me that they acquired 90% of Sun Inc. on January 31st, 20X2 in exchange for cash. The book value of Sun individuals' assets and liabilities approximate their acquisition date fair value. That's because we're in this particular chapter. So I'm acquiring this right here, right? I'm acquiring their net assets. Okay, so I'm acquiring 1,150,000. I don't know why this thing gets on a pattern where it starts doing that. I can never figure out how to stop it once it starts to want to do that. So I'm acquiring 1,150,000, right? And they're telling me that what? I acquired for 90% and book value and fair value are the same. So that means I must have paid 90% of that book / fair value, right? So 1,150,000, that 90% of that comes to 1,035,000, you say?
Yeah.
Okay, good. And so 1,035,000, that yields me a journal entry of debit 1,035,000, credit the cash 1,035,000. Okay. Okay, good. Then they want me to go ahead and create the basic consolidating entry right after the purchase. So number 2, if parent were to prepare a consolidated balance sheet on the acquisition date, January 31st, what is the basic consolidating entry? And that's going to be, I have to get rid of the common stock of Sun, don't I? So I know I have to debit common stock for 100,000. Do I have to get rid of their retained earnings? What? Yes, I do. So I get rid of their common stock, I get rid of their retained earnings, right? I get rid of the investment account, and then I bring on the books the what? The non-controlling interest share of the stockholders' equity at that point, which non-controlling share of the stockholders' equity is going to be this 1,150,000 now multiplied by the 10% is the non-controlling interest, right? So 1,150,000 times 0.1 gives me this what? 115,000. Okay. And then what is the basic consolidating entry at December 31st X2? So this is after 1 full year, okay, of operation. And so I need to go ahead and do what? I need to figure out what is the, well, I always get rid of the common stock. I'll get rid of the beginning retained earnings. Beginning retained earnings was going to be 1,050, which is the beginning retained earnings. So I get rid of that. I'm going to take a look at the income from son, and I'm going to get rid of the parent share of the income. So the income was what, 310? And I'm supposed to get how much of that?
90%.
90%. So that equals that 279. Okay. Then I'm going to go ahead and figure out what? Might as well take the son share of that. 310 times what? 0.10 gives me the 31,000, doesn't it? Okay. Might as well do the dividend. They tell me the dividend is 15,000. I get rid of all the dividend, don't I? So they told me the dividend is 15. I get rid of that. Investment in son. Okay, let's go ahead and let's figure out what's in that investment account. I'm going to put that up on the board. So under the equity method, I had my initial investment, which we figured out to be there to be $1,035,000. Then the problem tells me that, just looking back at the fact pattern here, the problem tells me that the parent had income of income of 1,035,000, but yeah, the subsidiary had income of what? 310 using the equity method. 310,000 times what? 0.9 gives me 279,000.
Yes.
And then I would do what? Subtract the dividend. 15,000 times 0.9 is going to give me 13.5 of dividend. And so that gives me an ending balance in the investment account of 1,300,500. So they credit the investment to get rid of it. Now, at this point, I could just plug the non-controlling interest, couldn't I? Okay, but let's just go ahead and let's figure out how that's going to work. So I have what? I have the, and the way I would do this is to figure out the, well, we know that the common stock is what? Common stock was 100,000. That was the subsidiaries' common stock. Subsidiaries' common stock was 100,000, right? Going back up, son's common stock was 100,000. Okay. Then I'm going to go ahead and I'm going to pick up the beginning retained earnings of son. It's right here. Beginning retained earnings of son. Beginning retained earnings was what? 1,050,000. I'm going to prepare the little statement of retained earnings. Okay. I'm going to do the whole thing a little bit differently this time than I did for that other question, just so I don't have to keep multiplying everything by 10%. 1,050,000, and then I'm going to go ahead and add what? Son's net income. Son's net income is 310, isn't it?
Yes.
And then I'm going to subtract what? Subtract son's dividend. Son's dividend was 15,000. So I go ahead and I subtract that. That gives me an ending balance in son's retained earnings of 1,345,000, doesn't it? If I'm doing my math right. 1,345,000. Look, guys, beginning balance of retained earnings, add the net income of son, subtract the dividend of son. That's an ending balance of the retained earnings account, right?
Yeah.
There's no reason to look at the row behind you. It's right here. Right? Okay? And then I take that number and I add that to the common stock number, which becomes the entire stockholders' equity at the end of the year of son, right? Which is what, 1,445,000? But how much of that belongs to them? 10%. So if I multiply that by 10%, that's where we got this number, the 144,500. Okay? So when we pick up the amount that goes in the investment account, it's always their percentage of the, look up here, guys. It's always their percentage of the common stock. It's always their percentage of any additional paid in capital, which we did not have in this case. And then we make up a little statement of retained earnings for them. And the reason I call it little, because whatever the ending balance ends up being in the retained earnings, when you take the beginning plus the net income minus the dividend, then we trigger a 10% on them, right? That other problem, I multiplied everything times 10%. I was telling you that's not the way to do it, because you're going to make a mistake with your calculator if you have to pipe in 10% 4 times. So I just did it all in one shot, didn't I? Question?
Did we skip number 3? Because 3 is the same.
I don't know. What did number 3 want? What is the parent's balance in investment in son prior to the consolidation on December 31st, 20x2? It's the 130,000. Is that what they say? 500? Which is what we took out as the amount that we would take out. So we kind of did it. They asked it as a separate question. And we kind of calculated. I erased it now. I don't like this book. They put all the burden on, I got to sit here and I got to figure everything out. Usually the books give you a little feedback. Here they just throw a number at you. Answer A. Okay, thanks a lot. Now I have a homework assignment. Okay? Question, guys? Chapter 5, Wednesday. Practice midterm on Wednesday. Real midterm 2 on Monday. Think about what you want to do with that. If you want to take it the way we did this last one, we can set that up in iLearn. If you don't want to do that because you'd miss your classmates, then you can come to class and we can do it in class, all right? We can talk through that on Thursday, on Wednesday. Okay, guys, have a good evening.